Hello, hello, people. What's up? How are you doing today? How is your day panning out? Welcome to this real estate knowledge series, and I'm here with none other but Cherry. Cherry, can we meet you?
Cherry! Right. My name is Cherry Akim, and I'm the business development manager at Terra Developers. And I think I've had real estate experience of spanning about 7 years.
About 7 years.
Yes.
Wow, that's beautiful. Okay, so just with that, can you tell us a change you've seen, like from when you started till now, like what obtains then and what obtains now?
Okay. So, I mean, then it was when I started, it was more difficult to get clients to key into properties because there was nothing like flexible payment plans. You needed bulk sums then to
Okay.
pay and buy property. If the property is 200 million, you need 200 million naira to actually buy that property. But now, I mean, there are a lot of options. The time has evolved. A flexible payment plan has come into play. Mortgages have come into play. So it's way, way easier to buy properties now
Hmm.
than it was 7 years back.
Okay, so flexible payment option is something that has really improved,
It has
are you
really.
saying? Wow.
It
Okay,
is.
and you mentioned mortgage. So that's what I even really, really want us to deep dive
Mhm.
into today.
Right.
So the concept of mortgage, what is it really? Just explain to a 4-year-old child, what is it?
So, mortgage really is a kind of loan
Okay.
that the bank gives to an individual
Mm,
or a corporate entity to support them or to help them acquire properties.
mm,
That's mortgage. A mortgage loan is basically towards acquiring a property.
mhm,
So, if you're eligible to get a mortgage, you can get that sum, a whole bulk sum to buy the property, and then you get to pay easily over a long period of time, say 10 years, 15 to 20 years.
mm.
Basically, that's a mortgage.
Okay, but there's this thing going around that once you take that loan, that mortgage loan, there's this thing that I've heard like it's like the worst kind of loan. You never come out. It's like some people even say the word itself, mortgage, like you're mortgaging your life. Is this really true?
All right. No, it's not true. So mortgage in Nigeria really is still evolving.
Okay.
It's a developing market.
Hmm.
So I would say that things are still really in the fine tuning process
Hmm.
with, commercial banks or PMBs in Nigeria. That's why the process of mortgage is still a bit, complicated in the sense that
Okay.
they would ask you maybe up to your grandmother's
Hmm.
certificate, birth certificates, and all of that. But no, mortgage it's getting simpler by the day.
Okay.
If you're a 9 to 5er, basically what the bank needs is your capacity to pay back,
Hmm.
really. And once you're able to, they see that your inflow is consistent and you're able to pay back in a certain number of years, you'd qualify for it, you'd be eligible for it. So it's something that you can go into, get the mortgage, buy your property, and in a matter of a few years, you've paid it off and you own the property.
Oh, wow, that's beautiful. So you're telling us today that people can get mortgage and pay it off.
Yes,
It's not something that it's not something like it's a
that you
juju.
take your life. That's
I want to enter like this.
that you take your life
The
in
juju
really.
man have helped you. You cannot come out again.
No, you can
Okay.
actually pay it off. I've had clients that have bought
Oh,
properties through one mortgage, and when they pay off, they take another mortgage, get another
beautiful.
property. I've had clients like that.
Wow,
So
that's
yes.
beautiful. So you can hear from the horse's mouth. She has people who have done this multiple times, taken
Hmm.
multiple mortgage,
Yeah.
paid off, and are still going for this option. Wow, that's very beautiful. So you talked about this Nigerian mortgage industry, and that's where I want to come down to.
Mhm.
The Nigerian mortgage industry, you talked about how it's evolving and all that. So can you just like a little deep dive more into the Nigerian mortgage industry?
Okay, so with mortgage here, there are just a few products in the market. So there is the MREF,
Hmm,
there is the NHF, and there is the FHF,
hmm,
right? So these products come via the Federal Mortgage Bank of Nigeria, and some private mortgage banks as well are open to giving these products. and the MRIF and the FHF now have even merged
Mm.
to give to combine into a particular product. So
Okay.
prior, the FHF had a very, very high percentage of 16%, between 16 to 18%.
Okay.
But now, because it's evolving,
Mm.
they now merged, and the percentage interest rates for FHF has even now
Yeah.
come down to 10%,
Wow.
just like the MREF. So
Okay.
those three, those three products in the
Mm.
mortgage market
Mm.
is basically what's obtainable. The National
Okay.
Housing Fund, which is, a federal mortgage, yes, a federal product.
Okay.
Then we have the MREF, which is a private product, and then
Mm.
the FHF as well. So those are the three kinds of mortgage facilities that are accessible here
Mm.
in Nigeria, and even to Nigerians, in diaspora.
Okay. Oh, that's beautiful. So please, you have to do us a little bit of, favor. Some of us here, all these terms, the EMRI, FHN, NIN, BBP. I know some of you is like, are we voting for APC? What is happening? So can you just do us, just like in 2 minutes, just do us the pleasure of like, just a little bit of product knowledge. You mentioned specifically FHF
Mhm.
and
MREF,
MRIF and
and then the um,
N
FHF, MREF, and NHF.
and NHF. Okay, so just those three. Can you just give us like 2 points so that we just know what it's all
Right.
about?
So the NHF is the National Housing Fund.
National Housing Fund.
Yes, that's what it
Okay.
stands for. This is given by the federal government, the Federal Mortgage Bank of Nigeria,
Okay, Federal Mortgage
right?
Bank.
So the NHF basically is open to, civil servants,
Okay.
and then even, normal Nigerians.
Mm.
So far, you're eligible,
Okay.
right?
FHF.
NHF, the
N
National Housing
H
Fund. I
NHF.
think the NHF gives a maximum of about 70 million
Okay.
as cap
Mm.
for the mortgage. So it means that if you're going for NHF, you should not be buying a property higher than 100 million, because you'd be required to do an equity of
30%.
30%.
Mm.
That's for the NHF. The
Okay.
MREF
Mm.
as well is also a product. It's a private public private partnership
Partnership.
for
PPP.
the
Okay.
MREF.
Mm.
I think the facilitators are the ARA managers. They are the
Okay.
ones in charge of that, and
Okay.
that facility gives you about 100 million naira
Okay.
in loans.
Oh, that's
So if you're buying a property, you can go for a property of above 100 million. So
mm.
far, you're able to afford the excess.
Mm.
You are required to do a 20% down payment for the MREF, and then the FHF as well has a max of, I think, 70 million as well for the FHF. But
Okay.
then with all of these products,
Mm.
the lowest interest rate comes with the NHF, which is the
Okay.
federal NHF. That's
NHF.
the National
National
Housing Fund.
Housing Fund.
That comes with a 6%
Okay.
interest rate yearly, and
Mm.
they all, I think, have a repayment span of about 20 years. But of
Okay.
course, depending on age, because the
Okay.
maximum age is 60 years.
Okay.
And once you are above 60, you can't access it.
Oh, okay.
So since the maximum age is repayment is 20 years, if you're 40, then you can spread for 20 years. If you're 45, you spread for 15 years.
Okay.
If you're 50, you spread for 10 years. So
Mm.
basically, those are the three. That's the breakdown of the
Okay.
three major
Mm. Hope
facilities.
we are learning. We are learning though. Okay, so but I think one thing that I missed or you didn't mention was the interest rate of Emirates and FHF.
Right. So those are 10%.
Oh, 10%.
Pardon me. Yeah, they are
Average.
both 10%
Okay.
yearly.
Okay, so 6%, 10%, 10%.
Yes.
Okay, that's great. Okay, and can people in diaspora can they access this? Are they eligible?
For now, I think
Mm.
diasporans,
Okay.
Nigerians
Yes, Nigerians, yes.
in diaspora can
Mm.
only access the MREF.
Okay,
Yes,
that's the
so
100 million around.
yes,
Okay,
because the NHF is for active civil servants.
okay,
Yeah, if you go on their platform, you see that they have plans of opening it up to Nigerians in diaspora soon. It's on the platform, but I don't think it's accessible now for
mm.
Nigerians in diaspora. But the MREF,
Mm.
yes, Nigerians in diaspora can access the MREF. I'm not very
Mm.
sure about the FHF, but MREF, yes.
Wow, that's great. I mean, thank you very much, Cherry. Your time was very inspiring here. You've taught us a lot. We've learned a lot. And so, just as we close, I would just love you to give a word out there for someone who is contemplating, "Ah, should I use this mortgage? Should I not? What is this mortgage about? Am I taking a bad decision?" Can you just, just leave a word out there for this person?
Right. So I'd like to, bring to mind that, look, the times have changed,
Okay.
right? And if you're looking at acquiring a property and you're saying, oh, the cost is really, really high, of course, everybody knows that there's no affordable housing in Nigeria, right? So you shouldn't be waiting on yourself to gather the home funds that you need to buy a property. The mortgage route is available and is enabling everyday Nigerians to be able to acquire properties. So I would encourage anyone that's looking towards the mortgage. I think it's the way to go. What you need to do is to sit down, calculate your numbers, and then most times I would advise a first time mortgage taker to take a mortgage on a cash flowing asset. So if you want to take a mortgage, don't take a mortgage on the house that you want to live in. Take a mortgage on an asset, a house that will be producing funds back, maybe a shopping plaza, maybe a shortlet unit, something that's reproducing for you to also assist you to pay back the mortgage. So it's easier that way. What you would literally need to acquire that property will be the 20% that you have. The 80%, the house in itself can repay back that mortgage. So, I mean, that's mortgage literacy. So, and that's how it's done abroad. Many people use that strategy. They put a very minimal down payment and then they take a mortgage to get the property. The property starts bringing cash flow to pay off the mortgage. Once it pays it off, before it even pays it off, they can still use that property to take another loan and buy another property while this one is paying off itself. All the properties would keep paying off themselves until when they pay off the mortgage, then the property belongs to you. So it's just mortgage wisdom to take that step. Okay, you can afford it, you can do it. Average Nigerians are doing it. I would encourage anybody to take that step.
Mortgage literacy. I brought to you a new one. Oh. You are learning words today. So this becomes the end of this beautiful program. Make sure you go to the comment section, drop comments and what you think. And if you have any further questions, we'll be there to answer. Make sure you like, you follow, you subscribe, and we'll be bringing more insightful and knowledgeable stories to you like this. Cheers.
Thank you.